Good morning, everyone, and welcome to our series Looking Ahead at Real Estate and Construction, brought to you by BDO in Australia. My name is Elysia Rothwell, and I'm an audit partner here in Sydney, and I specialise in real estate and construction and lead our team here in Sydney. I'm stepping in today for Andreas Reith, who is our National Leader of Real Estate and Construction, who you probably have seen in these webinars previously. But for today, we will be discussing ESG's value proposition in real estate. Now, before we kick off, just some housekeeping items. I'd like to quickly draw your attention to the housekeeping slide that is currently showing on your screen. To start, you are all automatically muted, but we will be accepting questions throughout the session, and you can submit these using the Questions tab. We will have time for questions at the end. However, if we run out of time to respond, we will be sure to follow you up after the webinar concludes. If you're experiencing any technical difficulties, please click the support button, which is one of the bottom tabs on your screen. And finally, this session is being recorded, and all registrants will receive a follow-up email containing the slides and a link to the recording, access to the register for future sessions, and the speaker contact details of us all. In last year's ESG and real estate webinar, we covered off different stages of adoption of ESG. We provided an overview of the opportunities available for all real estate and construction firms to improve their ESG reporting. In today's session, we're going to take a little bit of a different approach, understanding ESG beyond the reporting requisite, and explore how it can add value to your real estate portfolio in particular. We will dive into trends in investor mandates domestically and internationally, future-proofing your organisation, and also touch on the rise of green capital. With me on the webinar today is Jenine Cranston, partner, head of ESG at Knight Frank in Australia. Welcome, Jenine. And Jenine advises the Knight Frank clients in meaningful ESG strategies to enhance their investment decisions. She's been a sustainability advocate for decades, both personally and professionally, and has spent 30 years in the transactional side of commercial property. So we're very pleased to have you on board on the panel today. I'd also like to welcome Aletta Boshoff, who is BDO's National Leader of ESG and Sustainability and our National Leader of IFRS and Corporate Reporting. Aletta has over 25 years of experience in financial reporting and accounting, and her work in ESG focuses on creating and sustaining long-term value for organisations. Aletta also puts an emphasis on monitoring and mitigating ESG risks. So welcome, Aletta. Thank you for joining us today as well.
Thank you very much, Ellie. It's wonderful to be here, and it's wonderful to have Jenine here. Previously, I've presented with her at a Knight Frank event, so it's wonderful that she's agreed to join us at a BDO event because she's got such great practical experience.
Thank you very much. And I might also just share, Aletta's brought along some slides today just to kick us off for a bit of a high-level overview of the ESG landscape, and particularly around how we can add value to your property portfolio. And from there, we might go into a few detailed questions. Over to you, Aletta.
Thank you very much, Ali. Thank you very much for the opportunity. So I thought I'll just take a little bit of a step back. When we talk about ESG and sustainability, what do we really mean? A lot of people actually think we're only talking about carbon accounting and emissions and carbon footprint and reducing your carbon footprint, but it actually is a lot more. So what is that ESG and sustainability? A little bit of an overview. There are a lot of frameworks, but the key themes from all those frameworks, we've broken down into environmental factors, social factors, and governance factors, and that is the E, S, and G that build up to sustainability. So sustainability covers all of this. Now, if you look at environmental, the very first one is the impact of climate change, carbon accounting, emissions reduction. It's the first one, it's the most important one at the moment. The regulators focus on it, the media focus on it, investors focus on it. But there's a lot of other environmental aspects around ecological sensitivity, air and water pollution, biodiversity is an important one, waste recycling and reuse, energy efficiency, water management, fresh water availability. So depending on the business, you know, where do you sit there? And we've got a number of agricultural clients that have a lot of environmental factors that they into account. When we talk about construction, real estate, I would think carbon emissions would be a big thing, waste, recycling, reuse from the various buildings, energy efficiency of buildings, really important. And maybe to a lesser extent, a little bit of water management. However, when we move on to social factors, that is actually something that cuts across all industries and all sectors and all businesses. And that is how we deal with people, because people are often critical, really important to everything we do, especially employees, but it could be your tenants, and the people who work for your tenants. So people, you know, all those wonderful human beings. So how do we look after diversity, equity, and inclusion, and employee engagement, human rights, including modern slavery, customer satisfaction? Are our tenants happy? Are our tenants' clients happy? Data protection, privacy, incredibly important. Whether you're a property owner and you've got all the details of your tenants, potentially have bank account details, etc., you know, that protection and privacy, and only using data for appropriate purposes. Health and safety, obviously, really important. Community engagement. What role does a property play within the broader community, bringing the community together, respecting First Nations in the area? You know, we can go on. And wealth creation and employment is important. You know, we can treat people wonderfully well, but do we provide jobs that they could support themselves? I know money could be seen as an evil, but we also need it to survive on a daily basis. So how do we look after people? And what role does your property play in looking after people who work there, who own there, etc.? And then when we look at governance, now governance is where it all starts actually. And at organizational level, do we have the governance structures in place? Do that governance put ESG sustainability at the forefront? Is it integrated in strategy and governance? How does it play out around ethical behavior, modern slavery, stakeholder engagement, bribery, risk, etc.? So sustainability, just want to say, we're not just going to talk about environment and emissions and carbon. This is the whole area. And I think it's really important that businesses, including construction and real estate businesses, think, who are our stakeholders? What do they care about? Which of these factors is important to them? And then have a plan around that. So I just wanted to broaden the conversation to start up the webinar. So what is the business problem? Why are we here? Why are we talking about it? The business problem and the opportunity is this is all about access. It's access to capital. So whether it is equity capital or debt capital, but access to capital. It's access to markets. So who will be tenants? Who will engage with the organization as a customer? And in order to make sure we continue to keep customers, we can go to market strongly, attract tenants, attract customers. You know, what do we have to do? And then the third one is access to people. So people working in the business. So people like Jenine working at Knight Frank, passionate about sustainability. How do we keep all those people involved in the business? So access to capital, markets, and people, really important. And different businesses will say we've got a different maybe key focus that's driving us here. Maybe we are, as a fund manager or an investor, driven by capital, access to capital, or maybe as a property manager, you're driven by access to markets. So different people can have a different focus here as well. Then what is sustainability reporting? Now, it's an interesting one. We've been talking about sustainability, ESG, for many years. And as you've heard, somebody like Jenine has been in this space for 30 years. And a number of wonderful sustainability people have been in this space for 20, 25, 30 years. But it's all been voluntary, trying to get people to voluntarily engage with this and move the dial. And in Australia, especially because we haven't really had government support in the past, this has been a tough road for our sustainability experts in Australia. And I take my hat off to them for sticking to their guns for all of these years. However, what we often see from Ellie, what you see as an audit partner, what I see as a corporate reporting partner in the past, often businesses are driven by things that are actually mandatory. Sad but true. So, you know, they won't early adopt an accounting standard or do things that's voluntary, even if it makes good business sense. And I think sustainability might be another one of those, where a number of entities have maybe tried, a lot of people have tried to move it on, but now that we're staring down the barrel of mandatory sustainability reporting, there's a new emphasis. Suddenly, it's not just the sustainability experts. Now suddenly CFOs, CEOs, finance committees, boards are saying, tell us about this. It's going to go into our annual report. It's going to our investors. There will be assurance over it. Tell me about it. It's mandatory. Tell me about it. So there's two parts to reporting. There's the voluntary part, the blue part. Lots of frameworks. A lot of organizations have done an amazing job preparing voluntary sustainability reports. And Ellie, I'll do a little plug in for BDO. Today, I think around 2 p.m., we are issuing our second sustainability report in accordance with World Economic Forum. I spoke to the team earlier. We are just about there. It's a big task to communicate with all our clients. Yeah, all our clients, our partners, our staff, to tell them what we do around sustainability. But that mandatory reporting, the green bit, is really that we want to talk about today. And that is where it will be mandated to have certain disclosures in your annual report. And, you know, although a lot of people have done great work on the voluntary side, the mandatory is really getting a lot of traction. So these are all the frameworks. Mandatory reporting, big days. June this year, on the 26th of June, the International Sustainability Standards Board issued the first two standards, IFRS S1 and IFRS S2. And the next day, the actual next day, the 27th of June, and I think I've got it a bit later, but the next day, the Australian government came out and said, we will follow these standards, we'll align with these standards. So that was a real push for Australia. And actually, last week, Monday, the Australian Accounting Standards Board issued an ED on how they will push out these standards in Australia with some minor tweaks. And it's open for comment till end of March, but it will be mandatory along the original timelines published by Treasury. So that's important. To bring it together for you, originally we had financial statements, the dark blue bit that was audited by Ellie and her audit partner friends. Now we are adding the light blue bit, which is the climate-related disclosures, sustainability disclosures, and IFRS S1. That gives you general purpose financials, and it's mandatory. And the grey bit is still the voluntary separate report. Over time, everything will become blue, everything will be in one report, but that will take a number of years. So if you want to do the voluntary reporting, we've got a document that steps you through a few steps, and we can help you. Please reach out to me. There's the activation checklist. Very eager to help you. And then the mandatory reporting, as I said, the two standards issued internationally on the 26th of June. Treasury came out with a second consultation paper. We're waiting for the final, but the rumor is that there's not much change. And very important, there are three groups. There's group 1, group 2, group 3. Group 1, so if you meet two of the three thresholds, 500 employees, 500 million revenue, or consolidated gross assets of $1 billion, you just meet two of those, which BDO in Australia meets. It means that we have to do, as a group 1 entity, mandatory reporting FY25, 30 June 2025. If you've got a 31 December year end, it's 31 December next year, 2024. And it doesn't matter whether you're listed, unlisted, private, doesn't matter. everybody that meets the size threshold have to do the mandatory reporting. So that was a bit of a change. Initially, they were only talking about listeds. There's also a group 2 that has another 2 years then, and a group 3. However, I have to say this up front. If you are caught in the supply chain of these entities who have to do mandatory reporting very soon, they have to reach down to all their suppliers and say, please provide this information to us. It's not just about us. It's all our suppliers, especially around carbon. 80 to 90% of the carbon, 80 to 90% of the carbon footprint of an entity is actually in scope 3, which means it comes from suppliers. We cannot report without that 80 or 90%, and we need that information. We cannot meet our targets, set targets, reduce carbon without the cooperation of those suppliers. So we work with a lot of entities to reach out into that supply chain. So this is, what does it mean for smaller businesses, where I'm trying to articulate that point. It's really important that you consider, who are your customers? How can you continue to provide services to them? What information needs will they have? What will you have to do around carbon and targets to continue to do business with them? And that goes for tenants as well. Your tenants will have expectations in order to remain a tenant. Investors will have expectations. So we've got a little bit of a best practice roadmap. If you've got mandatory reporting, the green 31 December next year, you have to get your skates on to meet those targets. We've got some assistance, some documents that can help you. We've got regular webinars every month where we do a deep dive on all of this. I think important 5 tips is around, where do you fit in the system? Who are your stakeholders? What information do they need? And can you provide this information to them? And important, let's get started. Ellie, I think that's enough from me. That was just, getting us started to give you a little bit of an idea. I'm handing back the presentation to you and the team there in Sydney, and happy to hear Janine's views and your views. I know we're going to have a bit of a discussion.
We are, certainly, and thank you so much, Aletta, for providing that really, really high-level overview, because it's a really good, solid base. And I think one of the things that I love every time I hear you present, Aletta, is you put up this slide about access. And I absolutely love that slide. And it's one of the things that we really do want to delve into today is, talking about the value prop of ESG. So, there's a lot of people that are going to be captured by this mandated reporting. And what we're seeing at BDO from our property-based clients, a lot of them are saying, we're not in that captured point of view, and we don't need to report immediately. But we're talking to our clients and particularly saying, well, there's a value here. You could get in front of that and make it an opportunity. So I suppose, that speaking of the access, and access particularly, I suppose, to investors, unmuted, good, sound check. We're back on track. I just wanted to check from an access and particularly investors' point of view. I wanted to understand our check. Jenine has sound. Unfortunately, we haven't got webinar access with Jenine. But Jenine, what are you seeing from an investor mandate perspective, and how can that add value to your property clients that you work with? Sounds like we might be having a bit of sound check problems with Jenine as well, unfortunately. Perhaps maybe Aletta, if you wanted to talk about the investor prop. We're having some sound issues, unfortunately. Please bear with just for 1 second.
Hello, Ellie. Can you hear me now? Sorry,
yes.
I received a message that the organizer has muted me, so I couldn't unmute myself, but I'm back. It is such a shame that we cannot link in Jenine, because I know she's got a wealth of experience in this space. I'll tell you what I'm seeing with clients. So we've got a number of clients where they have fund managers investing in them, and those fund managers, many of them, have already come up with sustainability goals, ESG goals, and a lot of them have already come up with targets. So we want to reduce our emissions by 50% by 2025 or 50% by 2030, and then let's say reduce by 50% usually within a few years, and completely reduce by 2050 or 2040, right? So a lot of the big fund managers and investors already have targets and goals. So what they then do is they go to all the entities they've invested in, and they say, these are our goals. You need to align with them in order for us to stay invested, right? So we are actually mandating that you reduce your emissions by 50% by this stage. Can you start to report to us? And I'm helping a number of clients where we report to their big investors on a quarterly basis what the emissions are. So they track it on a quarterly basis. And they also say, and please tell us, what is your plan in order to reduce your emissions? So you cannot have a plan and commit to reductions before you know what your baseline is. So we calculate a baseline, we identify where does the emissions come from, and then we say, okay, we now have to reduce it. We have no choice. This is important investors. I mean, they are our investors. To keep going, we come up with a plan. So we help them with decarbonization strategies. We communicate it, and then obviously the investors turn around. Okay, we approve your plan. Thank you for putting it together. Now we want to measure how you track against your plan. And then we have to continue to, provide that information on a quarterly basis. So absolutely, we are seeing investors are driving this, and they're saying, this is our expectation. At the moment, I'm seeing it heavily around carbon and carbon reduction, emission reduction. Some clients, I have one client have 3 key investors. It's a challenge, Ellie, because the 3 key investors have different carbon reduction targets, right?
Interesting.
So one wants 50% reduction by, let's say, 2026. The other one wants 50% reduction by 2030. The other one is later. Your problem is, how do you engage with this very important stakeholder group on what is reasonable, what is feasible, how can we play together that, it benefits all. So yeah. I see a lot of this sustainability and ESG is actually communication, collaboration, bringing people together, agree on a path forward. It's a lot of negotiation here. So often we say to clients, let's get them together in the room.
Yeah, that's a great point. And I think, we do see international, particularly investors who are probably a little further ahead than us here in Australia, that have mandated sort of ESG strategies and beyond that reporting already. I suppose one of the common questions we get asked and in the industry is, how do we balance that investor mandate versus the consumer needs and making sure that the tenants are being put first as well in our considerations in strategy as well?
Ellie, that's an interesting one, because what we are seeing is a lot of these property owners are coming to terms with the reality that the tenants are putting pressure on them to have a more energy efficient building. Because and I'm talking about BDO ourselves, right? If we're a tenant in a building, often there's just so much we can do to reduce our scope 2 emissions around electricity that we purchase. We need the building management, the facility management to assist us to be more energy efficient, to commit to buying renewable energy, etc. So I think tenants, you know, especially government tenants, I should say, are starting to write into lease agreements the need for entities to have certain energy efficient measures to meet certain carbon reduction strategies. But if you've got tenants, again, who are in the supply chain of people who have to do mandatory reporting, and they therefore have to report to those customers, and they have to report their emissions, they turn around and say, you own the building, we need this building to be more energy efficient. And I think what we're seeing and starting to see is a lot of organizations are looking at renegotiating leases and moving to new buildings that are more energy efficient, more environmentally friendly. So tenants are voting with their feet. So in a way, you've got tenants on the one side pushing expectations more and more, and investors are pushing similar expectations. So I think the disconnect between investors and tenants will be removed over the next couple of years as this mandatory reporting pushes through the whole economy. So we are seeing as much push from tenants as we are seeing from investors.
Yeah, great. That's really helpful. And I think in terms of practical steps of achieving this, you know, have you seen anything that's working quite well and doesn't need to be property specific, but is there anything that we could do proactively, I suppose, as an industry?
I think the most important thing, and maybe this is because I'm an academic at heart, you know, I spent years teaching at university, so please excuse me. I believe in the power of education. All right, that's just as a personal principle, and I think it applies to sustainability. For us to understand where we sit in the ecosystem, who our stakeholders are, and reaching out to them and educating them on where this is going, what the expectations are, how we can help, how organizations can help. So if I'm a property owner, reaching out to tenants proactively, we know this is coming, we know there's an expectation, or even if they didn't know, this is what it is about. We would expect this pressures would be coming to you. How can we help? So I think that proactive engaging with this. I know previously when Jenine and I talked about this at a Knight Frank event, we said, and in an article I've written recently, I've said you can run, but you cannot hide from sustainability. So I think it's better to tackle it head on and start with education. And I really think, actually take it a step back, it is incredibly important that all our attendees today consider where do you fit in the ecosystem? You know, who are your stakeholders? How do you have key stakeholders putting pressure on you? Do you have tenants putting pressure on you for this? You know, where do you sit? Where do you belong? How does this mandatory reporting impact you and your stakeholders? And then that education, that outreach, that collaboration. I think that's important. Oh, there's Jenine.
She's here. We win.
Oh, isn't that fantastic, Jenine? I've never been so happy to see you.
Can we hear you though? Let's check.
Well, let's check.
Yes. Woo.
We can. Welcome.
It's key in property and in life, but perseverance is what it takes. So I've been very well supported by your team, but sorry I'm late.
That's okay. I really appreciate you coming along today, and I think you know the work that you do with Knight Frank is going to be very valuable in the conversations we're having today. And I'm not too sure because I could see you were on the line, but then dropped off for a bit. We're talking a little bit about the value prop for investors and the mandates, and that balance between what's too much versus what's needed for now versus what's needed for the future. Is there anything particular that you'd like to comment on in terms of investors and the value there?
Sure. Well, let's play catch up for the next 30 minutes. In my coming to ESG after 30 years on the transactional side, the conversations I'm having are very much investor focused. Aletta and I have spent quite a lot of time, talking about reporting and other things. And the palpable change, the very visible change that I've seen in coming into this space is that there's a shift from that ambition very much to action. And we're seeing that in all sorts of ways, but let me share with you as examples what we're seeing from our client base. My first few months was really getting connected to our client base. We manage 1,500 assets. They're a key target client of ours. And in that time, we've seen it's no longer just okay to do a NABERS rating. Now it's you have a NABERS rating for your asset and you are looking at an organisational strategy. You might be doing your certifications and then retrofitting your organisational strategy. And you're also, the thing that we have seen as the greatest indicator of change is, last year we might have done 20 decarbonisation pathway reports for our clients. We're really focused on helping them decarbonise built assets. This year, in one portfolio alone, we picked up 20, and the demand for that particular product, if you like, or report, is astronomical. So we're seeing that real shift from, yes, we're doing some reporting to really taking action to decarbonise assets. A client made a really interesting comment to us in the last 6 months is ESG was once literally the last page of their company report. They're a big investor. Now it's page 3. And when I socialised that with other REITs and privates, they were saying, yeah, we're seeing that the same ourselves. So that straw poll had a lot of accord. We are seeing, if I can be really brief, but we're seeing a lot more certifications. We obviously do a lot of NABERS ratings, but we're seeing that trend to doing more to take action. We are also seeing minimum standards required, okay? So the questions I ask clients are, who are your investors? And if they've got European or UK investment in the mix, you know that their reporting is going to be really sophisticated, their demands for that are going to be high, that their need for a decarbonisation pathway report is sort of the next thing. So we're also seeing some European funds sell assets in the local market if they don't reach, well, 4.5 stars. That's one particular one, but 4.5 stars, 5 stars, they're literally getting them off the balance sheet, so they're not wearing that risk. The other thing we're also seeing is that during the course of 2022, our London team created an ESG credentials document, and that was to sit alongside the technical DD in the sale process. The report didn't exist at the beginning of 2022. By the end of 2022, for commercial assets, particularly in the City of London, but it would have filtered out, almost every sale had an ESG report. We've called it an ESG credentials document, and that's because that report goes straight to the investment committee for them to analyse and run against their matrix of requirements. So these are ways that ESG has become embedded, and I love Susan Lloyd-Hurwood's comments at the Green Building Council Conference at the beginning of what was last year's conference. She said, no longer is ESG a bunch of people under the stairs over there. It is fully embedded in what we're doing. And I think that probably says a lot about where the leading REITs are. Not every company or organisation is at the same place, but it's good to see a shift, and we've got plenty to do.
That's really great, and a fantastic overview of where Knight Frank is at in terms of the journey. It sounds like you've got some wonderful initiatives over there. I'd like to hear, you touched on a little bit about your ESG credentials documents, and I suppose one of the things that we wanted to talk about today was how we safeguard our property assets and sort of market them differently in terms of ESG. And I know that with the flight to quality of A-grade office space, the likes of diversification of property portfolios, how do you see that as being a real opportunity in the market? And I might also just ask if you could just double check your mic for me as well, because it's a little bit crackly before answering the question. But how do you see the opportunities in terms of safeguarding your asset base and how we can shift the value prop there?
really big question. I hope that audio is a bit better. Where if you look at the ideal, in speaking to a client, I would say, let's talk about the E, the S and the G separately. So here's your gold standard. Around the E, improve your energy efficiency. First of all, you'd need a neighbours rating to understand that. You're probably, or you may be doing a GRESB survey on an annual basis, and that's a wonderful global survey to be done. I'm sure that many of the viewers here today are doing that. But understand your baseline, improve your energy efficiency through your property management. They're very much physical on-site tinkering with the asset, facilities managers and property managers. Electrify your assets, okay? Purchase renewables, and very lastly, for that minor percentage, offset with credible offsets. So the industry has been very focused on the E. That's no longer acceptable. The rise of social is huge in the time that I've been in this sector, and we're seeing real growth around that. And I would say, catering to the audience here, who are probably at various points of the journey, make sure you've got a modern slavery policy and it is enacted. Ensure you have a social procurement strategy, and this is embedded within the business. We're seeing these fantastic community engagement plans. By community, it means the people who come to work in the building. I sat in on a global call with our the ESG ambassadors out of the UK, and we had a presentation by Grosvenor Property, a very conservative Grosvenor Property, has the most audacious social strategy to positively affect people who come to their assets and who visit their assets and the communities around them. That is the gold standard and expectation that we will all be moving to. And we understand that not everybody's there. There is a huge amount of work to do, but that's where we're headed. But you need to start with a survey. You need to take the pulse of your occupants, some call them customers, to get a baseline of what's important to them. And as Aletta mentioned before, that materiality assessment is really important for companies and their stakeholders. Well, this is the property equivalent. Take that survey annually and respond to it. And I think, so that batches up social. Property Council have done some great work here because the language around social sustainability was a bit amorphous. And during the course of last year, they released a guide, which was, you can find it online, a common language for social sustainability. And it sets out the 5 pillars that they are using, and we're now seeing filtered down through the industry of what the industry should consider valuable in social sustainability. So something to look at. And then lastly, in governance, I'm here to develop a business, and governance is at the heart of it all. And I attended a fantastic forum this morning at BDO here in Sydney, learning about reporting. And thank you, Aletta, for the work you've done with us and your 30 minutes of joy prior to my late joining. It starts with leadership. And one of the things we're seeing is CEO remuneration in the last 12 months linked to sustainability, or KPIs linked to sustainability, have increased 35%. Now, I can't remember the source of that, but it's very credible. There you see the understanding and the acknowledgement that without leadership in this area, it's going to be a slow grind. So we need to understand and carry out sustainability risk and gap analysis. And we're talking about organisations and then portfolios. And then we need data. Now, Aletta has seen this fantastic new data platform that we've launched, and that can help assets as well as organisations. And we need credible data because that is going to help with the reporting that is coming towards us like a freight train. And every time I hear information like I did this morning at BDO in Sydney, it startles me just how much work is necessary, and you need really credible advice. So partner up with a trusted advisor in that area and get going. And that's something that was a real message this morning. And I would say, you've got green leases, and they are a mechanism by which that data gathering is critical. Now we're seeing that mechanism take place. The UK is probably 5 years ahead of us, and we keep the finger on that pulse very, very closely. We just lost somebody from our ESG marketing team joining the BDO team in London in the same building. I bet you poached her in the coffee shop, but there we are. Fantastic. No. Fantastic communications with us about what's going on in that local market. So that's something that the two groups can share with this audience moving forward. Green leases are a brilliant mechanism, but not straightforward, because you don't always get the participation you need. So I hope, Ellie, that answers some of those questions around that in this
definitely.
well
Yeah, no, really, really interesting stuff that you're seeing there, and sorry to hear that you've lost a good staff member, but glad to hear that we're keeping one. I think in terms of I think in terms of those, you've talked a lot about opportunities that real estate providers have in this space. What kind of reputational risks do you see organisations having if they're not adopting as quickly as their competitors?
I think you could go to loss of financial performance. We're seeing that every time. And I think these things are not going to be a surprise to anyone. You certainly get investors, shareholders voting with their feet and moving. When I first came to ESG, having spent 30 years on the transactional side, it was startling and pretty wonderful to see just how strong the market was responding to investor sentiment. It's all market driven. So the market forces will punish as much as they will celebrate. And here in Australia, we've got some really fantastic brands. In Australia, we are the GRESB leader, the international GRESB leader, and I understand we have been for the 11 years it's been in existence. So we've got some really fantastic performance and poster children companies, if that's a phrase. But we also see across the mix of property owners the laggards. And I would say it's at their peril, okay? So the three things that were very clear when I first came on board is that if you have a plan for your organisation, but critically your assets in this space, then, and if you're got a credible neighbours rating, then when you come time to sell, you have a bigger buyer pool, because on the way in, especially global capital is looking for better quality assets and better performing assets. You also have a better sale price, and we've done some research around this in the UK to say that anything more than a 5-star neighbours ratings gets you up to a 17.9, let's call it 18% sale premium. So it means something at sale time. And with the rise in tenant commitment to their own net zero requirements, you are getting tenants that choose assets that they can credibly say will support their journey. Okay, so they are the flags on the hill to work towards. And if you don't, at every point, and in those E, S, and G areas that we just discussed previously, there is risk attached to that. So this is not something, ESG is not something that is sitting over there on the cupboard, quoting SLH, former Mirvac CEO. This is deeply embedded in asset strategy now. And when you have exchanges with the big end of town, you can really see that. It's not to say that there aren't deployment challenges, and there aren't to say that there aren't operational challenges around this about taking plans and strategies and making them happen. But it is possible, and we're seeing some extraordinary work in Australia. And I do put that down to us being a small sophisticated microcosm in a culture that tends to share effectively. And that was certainly apparent, you know, in property in the 30 years that I've been involved in it. So we're putting more positive slant on that, Ellie. But we like to do that.
No, that's great. It's all about opportunity, I think, in this conversation. So that's a really good thing to hear.
And
I suppose,
can I jump in there and say this fantastic phrase that Davina Rooney, who's the CEO of the GBCA, she uses a phrase which is, we need a carrot, a stick, and a tambourine. And I fully adhere to that we do need a bit of celebration. There've got to be mechanisms for the carrot and mechanisms for the stick, but we also need to share and celebrate the wins that we do. Otherwise, it would be a fairly dauntless and grey task ahead. Great. So you're nodding, Aletta.
Yes, I always like celebrations, right, Jenine? That's my thing.
Well, as a South African, you've been celebrating quite wildly, I imagine, in the last week. Well done.
Yes, I'm not allowed to talk about that, right? Not in Australia or New Zealand for that matter. But yes, we have been celebrating. But I agree that often we are so focused on the risks and what we have to do and the mountain we have to climb that we actually forget what we've already achieved. And I always say to my kids, you know, don't think of what you still have to do. Think of what you've already achieved. Look back. You know, sometimes it's good to stand and celebrate what we've done. And what's amazing, what's amazing in Australia is whatever we've done around sustainability and ESG to date happened voluntarily, driven by market forces. It wasn't mandated. Now, I know mandating will bring a stick and all of those things, but we've actually achieved a hell of a lot without that stick.
Yeah,
absolutely.
And interestingly, being a leasing agent at the time that the neighbours' energy ratings were implemented, there was a bit of a stick there, but the government made a decision to implement that, and very credibly, that's now being offshored. It's in the UK and growing really rapidly, and we see that as a mechanism that's working there. But, you know, as I say, carrot, stick and tambourine, it's all necessary.
That's really great. Thank you very much. And I suppose one other question that I did want to touch on, because we've had a lot of conversations, I suppose, on investors and particularly real estate trusts probably. We've got a lot of callers on the line that are probably in very diversified different areas of property as well. When I think of ESG and particularly social, I also lean towards the community housing and build to rent and things like that, those kind of avenues. Is that something maybe, Aletta, that you've seen and is an opportunity in your view?
I think obviously government is doing a lot of work in that space around, I mean, we know we've got housing affordability issues. So I think maybe social housing and affordable housing is a very good point where the social aspects of ESG connects with other aspects of ESG, because it's first and foremost providing the community and people access to housing at an affordable price. And often when you provide build those buildings and have your tenants in there, it is paired with other social initiatives, which is amazing, right? So it could be around disability care, it could be around helping people improve whatever circumstances they're dealing with, you know. So I think social initiatives driven by government paired with housing initiatives is a really good point where this comes together.
Absolutely. It's a real connection of values in a way, isn't it? An opportunity for these providers to really demonstrate what they're doing in that space.
Absolutely. And I think government often, before they invest in properties or additional of these properties, they say, what other services will you provide to tenants? You know, social services, assistance with finding a job, assistance with whatever the condition is. So, you know, there's a lot of support that governments provide and not-for-profits provide. But how do we bring it together? Because a lot of people live in this building, so it's an opportunity to reach out to them. So it's actually a great story if we can get that right.
Fantastic. And I suppose we've only got 5 minutes left, can you believe it, of this webinar? So I suppose I'd like to just ask you both, looking ahead, I suppose, what do you anticipate ESG factors will continue and how will they continue to shape the industry for real estate portfolios in the coming years?
Mm.
Who wants to jump in first?
Well, I was going to say, Aletta, you should start because I was late to the party.
Yeah, listen, I think the whole carbon and reducing carbon footprint is the start, and that will keep us busy for a few years because it's very complex. So the whole measurement of your carbon footprint, setting targets, putting in initiatives to achieve those targets, that will keep us busy. However, we know that in Europe already, they don't only have a IFRS S1 or S2, they already have 12 standards around sustainability reporting, and that will come to Australia, and that will be around workforce, that will be about supply chain. So all of those things will come. I mean, in Australia, we have modern slavery, we have from the end of this year reporting around gender pay gap information. So I think the topics will keep coming, but absolutely first cap of the rank will be the carbon, but these other topics will be coming fast and furious, and it is a little bit depending on your industry.
Absolutely. And Jenine? Oh, we've lost your audio.
I think she's muted at the moment.
We've not had much luck on this one today.
Elliot says that she's muted by the organizer. Oh, that's good, she's back.
Back again, not sure what happened then. I would say the momentum is not going to let up. What we're dealing with is a transformation of an industry, and it's sometimes at great discomfort. So continued momentum, the pace might even get faster. So you've got small ESG teams dealing with the operational issues in assets, and now they've been asked to do reporting, so it's another layer. So we're going to see the mandatory reporting coming our way like freight train. The issue that creates is capacity and ability for teams to meet those needs, where we need businesses to know that that's real and they need to consider teaming and structures there. The things that we're seeing as trends that will continue to grow, I think, is embodied carbon is not out there in the future, it's here and now. New South Wales has a new SEPP that will affect all of us. We're doing some work on that and may bounce out with a client event on that next year. I would say the two that are absolutely critical to our clients here and now would be embodied carbon and reporting, and they do take up a lot of your time and energy.
Great, thank you. And from what I'm hearing, there are ways to do this. From both of you, you've seen it done. So I assume that if anyone's got any particular questions on how to action this, they can come and speak to you guys after the webinar to get some other tips and tricks perhaps. But it's good to hear that it can be done, and we're all headed in the right directions in terms of reporting and opportunities in the property space as well. We do have one question from the audience as well, and I might flick this one over to Aletta just before we finish off, and it was more around the mandatory reporting requirements, specifically around councils and local governments, and whether or not they're captured in that mandated reporting.
So Ellie, it's an interesting one. At the moment, Australian government, when they came out with the latest consultation paper, that second one in June, they have not addressed the public sector, government or local councils at all. And they haven't addressed not-for-profits registered with the ACNC, and they haven't addressed public sector. But they did flag that the Minister of Finance will be focusing on the public sector. My clients, local government clients, public sector clients, are gearing up to do this reporting anyway. They expect it to be mandated, and they're also realizing, they want to be ahead of the curve. So it's not mandated yet. We expect it to be mandated, but I'm seeing a lot of activity in that space already in anticipation.
That's great. Thank you so much for sharing. And I suppose that does bring us to the end of our discussion today. So thank you very much, Jenine and Aletta, for joining us today and for your valued insights. I've definitely taken a lot away from today, and I'm sure a lot of our contacts and clients on the line have too. Finally, before we close the session, I will just note that when the session does end, there will be a short feedback survey that will launch when we close, and that helps us improve future webinars as well. So despite the technology challenges we had today, we hope that you enjoyed the session. And if you do have any questions or thoughts about our future webinars, please do feel free to reach out. Thank you very much, everyone. Goodbye.
Thank you.
Ellie.
Goodbye.